I haven't done a video in a while, and I thought I'd do something. In my trading, I use honestly a lot of different techniques, strategies, data points, whatever you want to call them. Just like to name a few. I mean, I've talked on here about Elliott Wave Theory. I definitely use that a lot. I also use some candle range theory, CRT. And there's some also called ICT concepts. I use those, and kind of like this combination of and the other is trend lines. So I pretty much use a combination of all four of those. But what a lot of people may not realize is that bringing in multiple different points of view into your chart analysis, I have found to be extremely helpful. One other one I would say I use is what's called pattern trading. When you see a pattern, there's typically an expected outcome. So that's where I wanted to overlap today. You could probably potentially even overlap a third one, and that is pattern trading along with Elliott Wave Theory. So real quick, if you want to look into, or maybe you do some pattern trading, if you want basically the Bible of pattern trading, then you want to go to thepatternsite.com. Thepatternsite.com. Here it is right here. This guy Bulkowski wrote a book. I think he talks about it like you can buy it on here somewhere, or it'll take you to whatever. He's got tons of ads, but that's because the site's free. And this guy has done tons and tons of research on patterns and like tracking tons of patterns over time. And so what I wanted to show you is how there's a basically like an overlap between these things. So right now what I was going to show, this is oil, micro oil on the 4 minute. I'm usually not down on the 4 minute very much. I've pretty much got my trading to where I'm looking at the 4 hour, the 1 hour, and the 15 minute. But for example's sake, I'm going to use this because this is a pretty clear looking head and shoulders. So this head and shoulders pattern, you can use the old head and shoulders pattern drawing tool on TradingView, and there you get the head and shoulders. That's what it looks like. Now let's see what Bulkowski says about head and shoulders. I always just search something like head and shoulders. You can see it there, the pattern site. And usually, right here, the yellow, head and shoulder tops, and there's head and shoulder bottoms, which would be the flip, right? So it talks about that. I'll let you read this on your own. He goes through examples. He shows an actual chart. There's one on the actual chart. And then somewhere on here, he tells you how many. Yeah. The above numbers are based on more than 2,800 perfect trades, meaning he just scoured charts trying to find this pattern over and over and over again. And he, over time, I don't know how much time he spent on this, but it must have been a lot, 2,800 examples of head and shoulders. So there's that. And then there is, there's a couple of percentages here. So first is overall performance. One is best, right? So the lower the number, the better the performance. This has 9 out of 36. So maybe he has 36 patterns. I don't know. I haven't counted them. But this is ranked 9 out of 36, meaning it's a pretty good pattern. Break-even failure rate, 19. Average decline, 16. Average pullbacks, or the pullback rate is 68. To be honest, I'm not sure how to use those numbers, but this number I do know how to use. Percentage meeting price target. That means there's a target you can draw from a head and shoulders, and the price meets that target 51% of the time. Now, let me show you why that is important. Okay, first, we've got the head and shoulders pattern, right? We've got that pattern. And if you know anything about head and shoulders, one of the things about the target is from the high of the head to the neckline. You basically draw a line, get a measurement, however you want to look at it, and then you take that line, and we're going to put it right here at the breakout from the neckline. So we're going to take this, we're going to bring it down to right about there, a little higher maybe. And then that is our our target. So I'm going to put a horizontal line right there. That's our target. So we're at 72.37. Now, you can already see from this picture, you'd be like, whoa, man, it didn't hit the target. That's a stupid pattern. It doesn't work or whatever. You're right. But go back here. Remember what it said. 51% of the time. And he says in here, let's see if I can find it real quick. Oh, here we go. I found it. So a couple of things. Confirmation is always good to read this one. The pattern confirms is valid when price closes below an upsloping neckline or below the right armpit when the neckline slopes downward. So this is one of the sloping things I think he talks about in one of these places here. But the big idea here is that for this head and shoulders pattern, typically there's a slope to it. So you can see this one's slightly sloping in the upward direction. So that's what he's talking about. But that's the, it's confirmed. It's only confirmed when price breaks, which happens right here. That's confirmed. So anything else that looks like this but doesn't break below is not a confirmed pattern. So you can say it looks like a head and shoulders, but it didn't go down. Well, if price went like this and kept going up, then it wasn't a head and shoulders. So that's one thing certainly important to understand this confirmation, right? Here's what I say. Highest on the left shoulder by the head trends downward 61% of the time. So we're talking about volume. I have volume turned off on mine. Let's turn it on real quick. Volume. This is a volume average. So it says volume highest on the left shoulder followed by the head. So it's saying the volume should be highest here and then be a little bit lower here and basically kind of trending downward. That's not a confirmation rule, but that's just a norm. It is trending downward here. It's hard to say. It's kind of trending up really from the head or from the left shoulder. If we go left shoulder to head, it's trending a little bit upwards. So that might make you a little more cautious. But let me get back to this rule I was talking about. And that is, I just saw it. Oh, right here. So compute, already just drew all this. It's basically saying you compute A to B. You can draw a line on the neckline. You measure the height from A to the neckline, and then you transpose that height over to here, and that's your target. But here's the part I want to really break out or point out. The breakout is where price crosses the upward sloping neckline. We call that, or the neckline when it slopes downward. Basically, the neckline no matter what. But look right above that. Multiply the target, by the above price meeting target percentage, right? Percentage meeting price target. So that was this right here, 51% of the time. So that means if this is your measurement, then really what you're looking at is 50% of that is your real target. So if I draw a line, this is just one of my tools. Where's that 51% line? Or, you just go with 50. 51 is just a hair above that. That is your real target. And I think that's the part a lot of people miss on head and shoulders. They'll set their target down here and wonder why it never makes it. Well, Bulkowski says after checking out 2,800 perfect trades, that 51% of the time it meets the target. So if you set your target actual take profit here, you'll probably do a lot better. All right, so that's head and shoulders. The head and shoulders measuring, targeting, all that other stuff. But let me show you where this all intersects with, let me leave some of those drawings there, where this intersects with Elliott wave. So one of the things that sticks out to me is, and over time, if you study Elliott Wave Theory, they become like second nature. You just kind of see them. And what I'm talking about is anything that looks sort of like a lightning bolt. I'll call it a lightning bolt pattern. It's not a pattern trading. I guess it could be if it's an Elliott Wave pattern. But anything that looks like this, or the opposite way that looks like this. You see, that's our actual head and shoulders, but those are Elliott waves. Or better to say, they can be thought of and measured using Elliott Wave Theory. So we've got a trend. Let me get this first. We've got this trend that's going down, right? If I go to the 15-minute, we can see clearly we are in a downtrend. We've been in a downtrend for a little while, right? Here on the 4-minute, you zoom in, you kind of see this lightning bolt. And let's say you don't even know what's coming up. But that lightning bolt, I'm just going to assume right off the bat that it is an A, B, C. And it looks a lot like a zigzag because because that's the way it looks. But we can measure those, so we can use our measuring tools. That if you look at one of my previous videos, I'll try to link it below in the description of this video, to using setting up measurement templates. I'm just going to go ahead and go with zigzag because that's what it looks like to me. So we have a reversal where B is inside this zone. Anywhere in this orange zone is a zigzag reversal. Or at least it meets the criteria for zigzag reversal. And then we'll go trend-based fib extension. So we'll go same measurement, A, B, and it's going to pull this thing down from the top, C. And it barely meets the criteria, but it does meet the criteria. Same thing, anything in this orange. Typically, what I call the sweet spot is this channel right here, but it doesn't have to be there. This meets the measurements to be a zigzag. So that ABC drawing there is a good one. And then I already mentioned that there looks to be another one. I was pushing the wrong button. Here we go. A, B, C, right? And then we can measure that. So let's go from here to here. We've got to pull back into the range. And then let's check the extension. The extension goes a little bit deep. That's why I have this gray area, because I did find some other information that sometimes retracement can go all the way back to the 168. I know that makes it really, really large. Of course, some people, that's probably why there is a turnaround, or not a turnaround, but a little bit of a bump in the road right here, right on that, near that sweet spot, but that's not the full reversal. But either way, from this you can see, and which was the main point of the entirety of my video, is that head and shoulders pattern is also two corrective waves, ABC, right next to each other. And if you know from Elliott Wave Theory, corrective waves are typically in sets of 3. So you might have a 3-3-5 for a flat. And so that's what I think is forming here, a larger flat. I always like to draw my horizontal, I call them horizontal corrective, or not horizontal, counter trend corrective channels. Right, I think I've got that on here. Yeah. Elliott trend corrective channel, counter trend, right? We said the trend was down, so the channel slopes up. We've got a 3, another 3, and then, so what I'm expecting here is some kind of 5. I don't know what that'll look like. It could be, this is kind of looking like it would be a very ugly one. But this could be 1, 2, 3, 4, 5, an ending diagonal. It's kind of an ugly one. So it also could be that maybe this is an ending diagonal. Let me put that back up. But it is 1 degree lower. So I'm going to go from pink to green. That's lower. And then call that wave 1 of the 5 wave moves. So that would be 1. Then we ended up with 2, 3, 4, 5. Something like that may be possible. So the pink waves go together, the green wave is a smaller subset. That's basically, here's what's going on in wave 1. Again, I don't know this for sure, but if I want to move up a degree from pink, I think what might be forming is A, B, C. Again, I don't know where, I'll make that blue, that's 1 degree higher. I don't know for sure that C is going to go all the way up here, but, you know, a flat, oh yeah, so we can measure that because we have measurement tools. We can go from blue A, whoops, or blue 0, blue origin, to blue A, and then search corrective flat. To me, this looks like a regular. It turns around inside that zone. So A, B. Here, I'm going to make this blue. I'm going to make it bigger so it's easier to see. I'm just going to make it gold. Man, some of these things are just hard to see. Let me take away these smaller ones. Because you got the point by now. You can always rewind the video. So what I think is forming is ABC, a flat. So I've already got a good turnaround right here in this zone for a flat, and it's not guaranteed. But if we do the extension measurement and down, again, this is looking to me like a regular flat, and the measuring of these is what tells you that. So I've measured them enough now that it's like I can get a pretty good idea of what it is. Just like I see these lightning bolts. I haven't measured it, but I'm pretty sure it is a zigzag. So anyway, this is what I'm expecting, a turnaround of C somewhere in this zone, right? And if we keep the channel that I turned off, nope. Channel, where did it go? Parallel channel? There we go. You know, that obviously fits in there too. So anyway, that's the point of this, just to say, hey, there's no one discipline that's the only right discipline. They all actually serve each other. They're just looking at it from different ways. Think about it like math, which is the way I prefer to look at the charts, right? When we're trading and we're charting things, we are really working with probabilities. So that's it. We're trying to forecast the probability that price is going to move this way or that way, just like the weatherman. Is the weatherman always right? No. Are they frequently wrong? Yes. The question is, are you closer to right than wrong? And so, you know, probabilities are everywhere. You know, I think there's a high probability that this is going to go up, right? There was, remember the breakout from this neckline, that it meets its target 51% of the time. That's a probability. So if you set your take profit at the probability, then you're more likely to be correct, right? If it's going to rain 80% of the time in the forecast, if you take your umbrella with you, most of the time you're going to be right. It's going to rain and you're going to need your umbrella. If the chance of rain is 20%, you're probably okay leaving your umbrella at home. It's probabilities is what we're dealing with. And each one of these methods, that's what it's looking at. So I hope this is helpful to you. If you got any questions, leave them down below. I'll link that other video for the measuring tools. A lot of people have told me they found it helpful. I hope you have a great day. Happy trading and all the success.